Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. And I thought that today let's talk about the effect of this interest rate hike made by the Fed and what is gonna happen and what is gonna be my strategy, though I'll be discussing my strategy in the next video. And I just wanted to make this a short update video on what's happening with the market and what in my opinion could happen with the market. So let's get started. Okay guys, so the first thing first, if you haven't watched my video on my opinion which I made a few months ago on the interest rates hike and what Fed could do with the interest rates. If you haven't watched that, then I urge you to watch that video. It should be in the icon above somewhere here. And I clearly mentioned that in my opinion, I think that the Fed will come out eventually in March and will say that, look guys, the America is doing quite good and the economy is really strong. The inflation rate is high, but it can be controlled without raising the interest rates quite heavily. And that is what happened now. So the Fed came out, though they have mentioned that they will be doing six hikes, six in 6 stages. That is a hawkish strategy, but Fed still came out and said that, hey guys, America is a really strong economy. So the reason why the stock market moved in an upward trend despite of the interest rate hike is the following. So first, that the interest rates hike were just 25 basis points, a quarter percent, which is nothing. And if we see the inflation data, 7.9% guys. And now in the last 3 years, they rose the interest rates first time, and that too by a quarter percent, which in my opinion is really less. But this was seen as a positive point. This was seen as a bullish point, which I expected months before. And that is what happened. That could be one of the reasons why the stock market had an upward trend despite of this news. Now, the second reason why I think the market moved in an upside direction was because the Fed chief, Mr. Powell, came out and said, America is a strong economy and we are gonna survive, which I believe. I believe America is one of the strongest economies, but saying that out, of course, Fed will not say such negative statements because that will impact their decision which they made in the last years, and that's why they would try to come out clean. And that's why he mentioned this, which was probably taken as a really positive point by the investors, that yes, okay, they regained their confidence in America and American companies, businesses and stocks, and that's why they started buying back again. So that could be the second reason. Now the third reason, which I think which could have been affecting the stock market in a positive way, is of course the commodities and the oil prices. So the Russian-Ukraine war created a hike in the commodities and especially the oil prices. And now since last 3 to 4 days, especially when the price per barrel came down below $100, the focus was shifting towards commodities and oil. The money was moving from the stock market towards these commodities and the oil during this tension between Russia and Ukraine, and that affected the stock market and the sell-off, of course, because that created a panic, and of course during such times the stock market suffers. And now when the price came down from the commodities and the oil, especially below $100 per barrel, the money had to go somewhere. So the money moved from these commodities to the stock market, back to the stock market. And that is the third reason why I think that despite of Fed announcing interest rate hikes, affected the stock market in a positive way, because there was a lot of uncertainty. This inflation news is not affecting the market now as it affected 10-20 years ago. There are a lot of retail investors with a different psychology. We are in a different economic times, and nowadays any such news is taken quite seriously because there are a lot of young investors. There's a lot of money floating in the stock market, in the crypto market. So people are a bit impatient and the sell-off begins. But similarly, when there's a good news, when the uncertainty is gone, those same impatient people are impatient again, and due to FOMO, they buy back their favorite businesses, and then the market is moving up. So this is what I think happened now. Now, what in my opinion could happen? See, the market is in a big uncertainty still. Though this interest rate hike is a step forward, but in my opinion, like I mentioned in my previous videos regarding the stock market crash 2022, I still think this is quite less. Guys, just think logically. Inflation rate of 7.9% compared to a 0.25% of interest rate is nothing, is literally nothing. So Fed really have to do something about it. But like I have said this before, in short term, this is a good thing for the stock market. I am not thinking short term. My focus is on long term stocks, and that's why my strategy to hedge myself against this uncertainty is to invest into quality stocks. Yes, in this time, before the Fed was coming out and announcing the rates, the interest rates, I was, let's say, gambling a bit. I was putting more money into the growth stocks to get some gains, quick gains. But I have two different types of portfolios, and the other one in which I have completely hedged myself. This is the portfolio at this time which I'm focusing on. Yeah. So this is my strategy. This is what I'm doing. And this is my request to all my viewers. I'm not any financial advisor, and this is not any kind of a financial advice. Don't get emotionally stressed out on, or don't make hasty decisions based on some good news and emotions. Yeah, if you are getting a FOMO that okay, you will miss out on something because the market is moving since 2-3 days, this is not the way you should be investing for long term. If you're investing, think about long term horizon. Pick up the good businesses which you are confident in and which you think have good fundamentals and can survive any type of uncertainty. Yeah, though uncertainty will affect any kind of a business, because like I said, there are a lot of emotional investors nowadays in the market. Every year new youngsters and new fresh investors are joining who are quite emotional and who have not so much good knowledge about the stock market, and are entering and are making decisions purely based on emotions and headlines. That's it, positive and negative headlines. That is affecting the market for sure. But think about long-term investing and don't make such hasty decisions. That is just my personal opinion, and my next video would be about which stocks I'm picking now and I'm averaging them down. And yeah, I didn't want to put that video into this one because this would have made this video quite long. So that's it, guys. My opinion, like I said, I think the market will remain uncertain. There will be a lot of volatility in the market. Choose wisely. Choose those businesses who are giving you an edge and who are hedging you from this uncertainty, okay, from inflation, from anything. So that's it, guys. That's all for this video. I'll see you in the next one. Until then, stay safe, stay healthy, and ciao.